Lilly in the Intrendias terminal is considered a sell. I have a technical analysis algorithm that looks at popular oscillators like the MACD line, RSI, etc. to come up with simple buy and sell signals. And currently for Lilly, we are at a sell. Most recently, as of October 20th, seems to be correct, as we were at a high of 620, but now Lilly sits at around 560. There is potential for Lilly to continue towards the downside. We're going to look at the technical analysis chart here in TradingView. First off, I would like to point out that we have a large volume gap caused on the day of earnings back on August 8th. This earnings caused gap may need to be filled up in the future. Simultaneously, I am seeing some large divergence occurring with both the RSI and the MACD line. For today, I'm going to show you guys the MACD line divergence. Essentially, this divergence could pose as a bearish stance on Lilly, and we may see some more downside. Moreover, we do see that the Bollinger Bands have been hit twice up here, causing the stock to tumble back down, and the RSI and MACD has been crossed here. The RSI has crossed below the 50 line, and the MACD line has been crossed. Finally, we can look into the Fibonacci sequence. Fibonacci has been something popular that I've been doing on the channel. Essentially, we are going to take the min and max of the most recent bullish move. So here, March 8th seems like the best choice to dictate when this new bullish move started for Lilly, and the max high is set for October 13th. Next, we're going to add the anchored VWAP here to add some confluence to the golden zone of the Fibonacci between the 0.38 and the 0.618. And then instead of the Bollinger Bands, I'm going to go for the EMA line here, and I'm going to go for moving average exponential, and instead of 900, we're going to turn that, or excuse me, 900, that'd be crazy. Instead of 9, we're going to go for the 200. And what we see here is some decent confluence for the Fibonacci sequence. As I can find the brush here, we can see that both the VWAP and EMA are in this golden zone of the Fibonacci, which can support the thesis that Lilly can bounce off the EMA and VWAP lines prior to another bounce to the upside. We may see some drag in the stock prior to any further upside. Therefore, for the conclusion of the video, I would say the 920 or 914 line, somewhere around here, we may see Lilly drop to before any bounces further. Regarding why Lilly has popped a lot recently is essentially because of the diabetes drug Mounjaro, which is seeking FDA approval according to Barron's, which can reach peak sales of 60 billion. So there may be exhausted excitement in the short term as Lilly stock price has decreased from the highs of 620s. There can be further decline all the way down to the 520 line. If you would like to see a video on Lilly fundamentals and financial analysis as a part 2, like and subscribe to the video to let me know. Also, make sure to check out the free Intrendias terminal for the buy and sell signals. Furthermore, however, we do have a price forecast capability now in the Intrendias terminal, which uses the GARC and linear regression machine learning models to help us predict a dollar figure for the next 90 days of any stock or crypto index that the user types in. Usually the model takes around 9 to 11 seconds. And here for the forecast, we can see some bearish moves to the downside. The GARC model is a bit more bullish in this stance. However, we can see that the average, which is the forecast in Intrendias, it averages out the GARC and linear, which poses a decline for Lilly. So not only do you have buy and sell signals, you also have access to machine learning price forecasting. So let me know what you think of the Intrendias terminal, and let me know if you're buying or selling calls or puts on Lilly, and what do you think about the 520 line. Let me know in the comments below. Thank you for watching, and I will see you guys in the next one.